Hi everybody, my name is Gary Dean with MarketsPath, and in this video I'm going to go over my methods that I use to time the stock market and pick tops or bottoms. And a big part of the methods that I use are based off of W.D. Gann's methods, and that they have to do with price and time. And I'm going to show you how I set up my charts with it, how I measure it, and just give you a basic understanding of how it works. But if you really want to learn the methods and train yourself as well, I would highly recommend you buying this Gann Analysis Unveiled. It's one of the best ebooks I've ever read on the stock market. So whether you're a beginner or an experienced trader, this book will do wonders for you as far as trading. So it's the link is on this page, on the page that I have the video. So I would click on it, check it out. It really is one of the best ebooks I've ever read. So let's go over some of the how I use these things. So I have some things already in here, and I'm gonna where is it? Show all drawings. Okay, so basically the way that this works is like this. These are just time ratios, and the way that you really want to measure things for picking tops and bottoms is determining the length of time that it took for your previous move. So from this low here to this top, this is just your time ratio. That's 100% of it. So the way that you really want to figure things out is you then take it and bring it to the top here. And how you do it is, if you notice, a lot of times this size of the move or the time period is going to mimic each other one way or another. So this was your low to your high. And notice on this drop right here, it didn't even come close. This is 50% of this move right here as far as time, 62 and 75%. So you can see we made a bottom way before the 50% time-wise. So that's telling us that this is a very weak move. So the way you want to measure price with it is you just take some Fibonacci retracement levels, and the way that you do that is you put them from your low to your high, and they just break down into 23, 38, 50, 62, and so on. So they're basically on every charting system that's out there, so you should be able to find them. And really what you look for is this. So you have the time period that you would be looking for some kind of turn. That would be at a minimum 50%. So that was this bottom would be looking for sometime in July of 2012. But you can see we made it a little bit below the 38% retracement. We had support right here, and the S&P then rallied. So it was telling us to anticipate that we were going to be taking out these highs right here, and that's exactly what we did. But now if you notice, so remember, this was this time period here is from this low, so bottom to top. And now look what happens. We have a top to top, and it's almost it's right around when the top did take place. So you can see it actually mimicked this from bottom to top to top to top. Now, if you then take this and now move it to the lows here, you then now see, so we have the top part that was 100% coming in here. Now look at the 62% retracement. So we had kind of a double type time frame to look for a turn. And if this is our MEL system, which we do our day trades on, you can see the video below that. And this is based off of institutional activity. And here you can see this is declining. So it's telling us that momentum and institutions are selling this rally right here. And we made it, we obviously went to the 62% retracement. I'm going to delete this right here because that came through. So we made it to the 62% retracement as far as time-wise of this period. And from top to top, we actually were at just about 100%. So we have momentum or institutions selling. We have bearish divergences that are in place from the price oscillator. And we had time that you wanted to start looking for a turn. So that is the way that you look for a top on it. So now let's see if we can get a bottom. And what we're basically going to do is take our low to our high here and now match it up with this. And if you look again, here you can see the 62% time retracement continues to be a period that you want to be looking for a turn. So here was the 50% of this rally. We went a little bit below that, in between the 50 and 62% time-wise. And now, again, what you really want to do is just match up your price with it. So we take this and we then turn around. We have our time in place. I'm going to zoom in a little bit. And the way we figure out if it's going to be where the price would be for a turn, again, we're going to do our regular Fibonacci retracement levels. So we then take that, move it up here. You can see this now gives us a box that we can now look for where the time could turn. So we are in between the time period. Whoops, sorry. We're in between the time period that it would turn if we're going to head higher, and that's in between the 50 and the 62%. And you can see we're at the 62% retracement. So this actually gives us boxes to see, to visualize where a possible low or high would take place. And this happened to fall right in between the 50% retracement and the 62% retracement, in between the 50 and 62% time-wise. So this was, say, your sweet spot for buying this dip right here. And you can see right here our MEL system was turning up, so it's telling us institutions were then buying here. And as you can see, we had a massive rally from the 1340 all the way up to 1447. And now let's just see if this this top right here coincides with anything. So here you can see we're going to do the same exact method here, and we are going to take the low to, now we're taking the high to the low, and we're going to turn around and match it up with the low. And look where it happened, right at the 50% retracement. So these numbers are very important as far as time-wise. And once you're able to visualize where the time, you're usually not going to get a very big move in the market one way or another unless we're at one of these time periods. So the 50, 62, 75, or 100% time of the previous moves are very important, and then you just measure out your Fibonacci retracement levels for price, and that's how you determine where your tops and bottoms are going to be. And it's something that I use religiously, and like I said, this is just how I set up my charts and how I work things. If you really want to learn all the methods, I highly recommend that you purchase this. If you read it and you don't want to do the work or be able to track these down, and you want somebody to do it for you, then that's what we do over at Markets Path. We do this in our nightly video reports. If you're interested in day trading, I again would highly recommend that you watch the video on the MEL system. This is just an example of how it works. It shows you all the internals here. And basically, when this is red, you want to be selling. When it's green, you want to be buying, because you're following the institutions. And that's really, you do, basically, you can set up the same type grids that I was just showing you on the longer term charts on the shorter term ones, and it gives you your boxes to look for turns. And basically, once you just follow these systems, it's not that hard to make money in this market doing this, especially with these types of day trades. So hopefully this helped you, just show you how I set up my charts and how I use the time and price to determine tops and bottoms. The next video is going to show you about the MEL system. Again, watch how we just make money every single day trading this. And hopefully this helped you guys out, and good luck with your trades.